Hi and welcome to the Market Alert for Wednesday the 28th of April 2021. So the main news this morning, are we at peak in everything but the stock market? Many important drivers of the stock market look to have peaked at least at this time. Well, we are in that stage where I've mentioned before, selling may go away. So there is still that potential, but the market really hasn't moved to the downside at all. Since we rallied. The market is being supported, which we'll look at in just a moment. On inflation news, it's about to get much worse. Supply chains implode as price doesn't even matter anymore. And you can see here that somebody was ready to pay £15,000 more per container just to get it loaded, and apparently had no luck in doing so. So again, the supply chain is still broken. And this is going to fuel the hyperinflation that the Fed have been looking for a long time. Meanwhile, on the implied front, 14.75 for Monday, Tuesday, we're at 14.94, so a slight increase there. And speaking of higher prices, the 10-year yield has moved up sharply over the last 24 hours. You can see this quite markedly. In the 5-day chart there, you can see this spike up from around the 155, 160 to now we're breaching this and putting pressure on the metals as well, which again we'll look at shortly. So news today, we've got ECB at 3 p.m, so nothing this morning. Lagarde's out at 3 p.m, we've got crude oil inventories. FOMC is going to be the biggie today, and then their conference at 7:30 p.m. this evening. So let's have a look at the Dow, if I can find it. It's in here somewhere. And we'll start off with the daily chart. Again, you can see we're still stuck in this sideways range as the market absorbs the earnings that are coming through. I'm surprised that we didn't have a go yesterday to the upside, but failed miserably. We can see an increase in volume here as well, more or less the same range as the previous day. Prices spiking back up overnight, but we've seen that for the last 2 days, and then the market's reversed once the cash markets have opened. And the same more or less for the German DAX. Again, you can see we're stuck in this sideways move. Still got that sort of ascending triangle pattern, and again trying to move to the upside. 2 days where the market has actually moved lower and then recovered, getting back above that 20-bar moving average and sitting on this at the moment, and just slightly above the 5-bar moving average as well. In the 2-minute charts for the overnight market, you can see there's been a bit of weakness, but this was soon picked up, and prices brought back above the DP. You can see there in the last couple of hours prices have now got back above the 200 MA, and the DP are moving back to the upside. The high isn't that far away for yesterday, and if we just squeeze this down a bit more, I've removed the I had to reload the chart yesterday, so I was looking for the 62% retracement area. That 346 needs to be taken out as we get to it as well. So 346 is above the R1 there. It's just here in this area here. So if we get through the high, then watch out for that 346 level, as the prices are likely to struggle. But at the moment, looking fairly bullish for the stock markets. Meanwhile, in the metals, the complete opposite, because the yields are up. We've got metals being moved on the downside. I'm not surprised. I'm amazed it's actually stayed up this long, as you would have gathered every morning from the Market Alert. I'm more surprised about the fact that it's going up than being hammered to the downside, but there's plenty of time for that today. Again, areas of support would be the 62%, because it ties in with the 20-bar moving average and the 50-bar, just in case they do decide to pummel it to that sort of level, which would never surprise me, to be perfectly honest with you. But then you never know. Now I've mentioned that, it might turn around and actually break the 26.63, who knows. But the options expire, I think, today as well, so they're going to do the best to try and keep it around the 26 till that happens, and then it'll be free to be hammered. But we'll wait and see. But the other reason as well is that we've got support in the dollar as well. You can see this starting to move to the upside as well. So again, what I'd be inclined to do is just to have a look, see how far this is likely to move to the upside. The last sort of spike that sticks out is this one here down to this low. I would use this as a way of just testing the small and short-term move back to the upside. And if we actually breached the 89, then I'd move back up to this sort of level here and then back to here. But this way you get a good indication of what it's doing short-term by using the fibs in this way. It's what I call a rolling fib. And gold also taking out the low of Monday, which we're sitting on it at the moment, but looks like it's likely to take this out. And again, from this low to this high is where I would have a look, see where we've got any sort of support. And again, it comes back to that sort of 62-50% area where we've got the 20 bar moving average as well for the gold price. So that's a quick overview of where the markets are at the moment, and a look at yesterday. Well, yesterday morning was just dire. It was just so quiet. And again, you'll see the market open, move to the downside. And I'm really going to speed through this because the market barely moved out of this range for the morning. And you'll see this just trading sideways. I mean, that's it. That was it for yesterday morning. You see the volume dropping off after the open. And then it picked up mid-morning quite nicely, actually, which is a pattern that I've noticed. I'm beginning to wonder whether it's worth being here this sort of early. Or, you know, from sort of 10:30, it starts to pick up quite nicely. So something I'm going to start looking at, because some really nice moves yesterday mid-morning for sure. And in the afternoon, well, it got a bit more lively, but it was still stuck in the sideways range, and it was a narrowing triangular shape by the end of it. We did have a sell signal. The market started to move to the upside, couldn't advance, got stuck at the 200 MA, so they decided to have a shakeout down to the low. Looking at this level at one point, thinking the market might actually hold, but fortunately it didn't. So prices continued lower, and then once we got to the support to the left, you'll see me just add this in. There's the low to the left, and once we got to this sort of level, it was a case of, well, I think I'll take the money off the table as we start to see the market being tested just below here. And then, of course, true to form, they again retested and then brought the market back, which you can see here. More or less 78%, 89%. Then we had a bit of weakness after the news. Consumer spending coming out, hitting an all-time high. And that didn't really push the market. Again, we had more weakness, and then the market got into a sideways move. And again, it was struggling in this area to actually move high. We've got this resistance here, so they shook out. And then they decided to do exactly the same again. Big bar down. Except this time, when they completed this, they then reversed the market immediately, and you can see how much of the buying came into it, and the shorts who just had a quick run to the downside bought back and also bought the market. And it was a case of ditching the trade, get out, because that's indicative of the market moving back to the upside quite sharply. And that's what we saw eventually in the afternoon. Took a moment or two, but we then started to move up. And then again, it ran out of steam. So prices then retraced again and moved back, and then ran out of steam. It was just a very bizarre afternoon. But you can see we got this sort of up here and again across here with prices, and then of course they managed to move just slightly higher after this, when the 4 o'clock cut-off period had come and gone. So there we go. Not a lot to report about yesterday, and that's seen in the daily chart as well. You can see that if I can find the right chart, that's the Dow, so it's here, and there you can see managing to rally back before the close and also close above the 5 and the 20 bar moving average in the evening there. So if we just move this back a bit, you can see there we're headed back towards the DP after the afternoon. So it managed to get through this is that same triangular shape. Let me just reset the chart so you can see. So here we've got that we looked at earlier, and then the market broke through this, but again really quiet, and then managing to move higher again following another shakeout. But where are we now? Let's have a look. We're still above the close, above the DP and the 200 bar moving average, and we need to close above yesterday's high to make any progress to the upside. Okay, that will do it for this one. If there is anything to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.